All right, guys, we have another Sunday video, this time for the 5th of February. We're changing up a little bit this week. We have a special guest, which I will get to in a moment. I wanted to go over and showcase a few things that we finally updated the website. One of the things that we've been working on for quite some time is obviously the tech that I've been talking about. So, now you can kind of see what it is that we have. And this is probably still only about 20% of the way there. But you can see some of our intraday scanners or trend scanners that Max just had launched, and basically finds a nice steady trend either going up or down. And you can just toggle right where it says either bullish trend or switch it to a bearish trend. We have customizable filters. You can also share your own type of filter with other members in the community. You can also see others if that's something that they are sharing. Market research, as far as SEC filings, we always have obviously the volatility halt monitors. We integrated XFeed, AI news, which has been phenomenal, especially this week when we have offering after offering after offering. So, without further ado, I'll bring Chris on here, and we are going to be talking about what we are looking at for the week ahead, a little bit of a recap from last week. And as you guys know, and as I've kind of introduced, more of the macro sort of feel about the markets rather than just the small cap, but what's really going on. How does the Fed impact what's going on in the future, whether that's with NVIDIA and Tesla and all those different things related to rates. So we'll get to all of that. But without further ado, how you doing, Chris?
I'm doing well. I'm happy to be here. We had an exciting week, and I think we're going to have some more action coming up in this week.
Yeah, it's been a wild week. And one of the first things that I wanted to jump right into was obviously Meta. Meta, absolute, I don't even know what percentage that was. I think it was 16, almost 20% move or so. And then Amazon as well. And it reminded me of something that I've said before that I heard from Martin Shkreli. But stocks that tend to double, or stocks that double tend to double again. And so we've seen that in NVIDIA. We saw it with SMCI. We saw it with even at this point, I guess, Amazon and all of these. So you had some comments about the large cap versus the small cap, really focusing on what you were looking at this week, which was SMCI and NVIDIA.
Yeah, we've had we've had a couple of those names really make some big moves. We had SMCI, Nvidia, and now Meta and Amazon. And I think it's just important to realize the difference between some of these large cap moves versus some of the small cap moves. And so they might have similar charts when something's going vertical, but there's a very different structure underneath it. And so with a lot of these large caps, especially take something like pull up SMCI. When they pre-announce earnings or when they're showing earnings, it's not just a stock that's doubling or going up 30-40%. Their earnings are also going up a proportionate amount. And so even though things look like they're going vertical, if the earnings or the fundamentals or the things that hedge funds are looking at, if those factors are also doubling, then the price is not as extended as it actually seems. And a way that a lot of these large caps move is you'll have a piece of news, a fundamental change. You'll have funds step in, and they're not looking for a day trade on some of these things. They're looking to build a big position and to hold for the quarter, the year, and everyone wants SMCI, Nvidia, Meta on their books. And so I think that's just a good thing to keep in mind. If you see these things making a giant move up, the way that they kind of pull back or consolidate, it's usually from like a huge run in the options or something like that. And then as those options settle down later on in the week, then you'll have them start to consolidate. But it's not like they gap up, stall, and then flush down to where they started from. That's more in the small cap world where things are up on air, no real fundamental reason for it, and then they fade back. But these are much different.
Yeah, and I think also one of the big things, there are big changes in Meta was now I think they did the buyback too, right? And then on top of that, the dividend. So now you have even more funds that are jumping in because now they're going to start to get that quarterly dividend that they might not have gotten before.
Exactly. So, you have hundreds of ETFs and mutual funds and everything that they have rules. And if you have something like Meta that announces a dividend and now that falls into the bucket of all those mutual funds that are looking for, growth and income, then that starts to get added. And so if you look at the shareholder base of a lot of these large companies, you'll see Vanguard, BlackRock, and all these people have 5%, 3%, 10%. And you have to think that when there's a fundamental change like that, you have funds like that coming in and scooping up 3%, 5%. And you have it combined with them hitting mostly all-time highs. And so we talked about on Trading Takes when you were on the episode, how after a cycle, when there's no one really above looking to sell, when there's no bag holders, when it's just blue skies, you can really run for a while because the only people that are selling are either people who are profit taking or people who are maybe short selling, or if the market pulls back for a few days.
Right. You need that pullback and then the pullback and the pullback again to start to question whether or not you should sell. Everybody's a dip buyer until it's got to the point where it's a little bit too late, and then they finally had that first maybe I should be taking it off, and then you finally start to have the pullback. But as far as a run up, it is thin, and it can always go further than you think. One of the things like SMCI, I remember back in the day when we used to have these crazy movers, back when we did have those 80, 100, 150 type moves. I always had suggested to kind of divide out the share price, because a lot of times people look at it and they say, oh, at $80, $90, it's run too much, or Meta being up $60, it's run too much. But when you divide it out and think about it as like, say, a $5 or $6 stock, if it's consolidating at, if it ramps up from 4 to 6, consolidates at 550, you would think it's probably going to go 7 or 8. But when you look at a stock that's 400 and it goes to 600, you're thinking that's up way too much. But in reality, if it consolidated at 550, there's a good chance that it makes logical sense to go to 700, 800. But it just is we're looking at it differently because of the price range. So I always remind people, divide that out by like 10, and then think about it from that thought process instead.
Yeah, exactly. And that's a great trick to use, especially if someone's usually trading small caps or something where they're just not used to the same price moves with some of these large caps. So someone might feel very comfortable trying to short some of these things and be like, oh, it can only move up however many dollars. But then you have a move like Meta and it's up 20% in one day. And so I think, people have to be careful that if they're trying to fade some of these things, that they can still move like small caps in some regards, but they just don't have the flush that can bail them out right after.
Exactly. So another thing too is, that happened this week, and what I kind of wanted to dive into was some of these offerings. And usually, I talk about, I'm just going to go ahead and put up a chart of a couple of the ones that happened this week. And so we have, something like GRI, for example. We have something like NEXI, which did an offering on Friday. We had stuff like PBLA. We had REVB, and all of these just home run opportunities and really layup shorts. They did everything that they're supposed to do, right? Meaning if they had an S1 and then they amended it a few times, it's literally just a couple minutes away, a couple hours, or a day away from a raising. And the problem is that there's cycles, right? And so there's times where maybe you can get away longing these things and they squeeze further than you think. And then there's times like last week where you could do no wrong. And literally every single one, I think it was 5 or 6 of them, I said, hey, raise imminent, like be aware. I said, there's TikTok. It's just a matter of time. And then on some of these, 5 minutes later, there's a raise. An hour later, there's a raise. And so I think it's very important, and usually we try to do this on Sunday Video, to make sure you're aware of the current cycle you're in. And when shorts are not necessarily even bailed out, but when shorts are rewarded for scaling in on everything that needs to raise money, they start to gain more and more and more confidence. And at some point in the next week or two, there's going to be 1 or 2 that are supposed to raise and they don't, but based on how aggressive they were and got away with it last week, it's going to catch up. So I just want to, just like on PRZO about 6 months ago or so, when I had warned, just read the room, be aware. And if you're shorting something, anticipating an offering, and it swipes up and it's not doing what it's supposed to. Just be aware. Don't get in a fight with it and end up getting in a situation where they end up pulling the offering. Everybody's anticipating. It's a micro float, and you end up in circuit halts that you can't get out of. So be aware of that. And other warnings, one that Chris and I have talked about numerous times. Now, Interactive Brokers has coined the term ramp and dump. And these are the ones that we've been talking about all the time. And I call them liquidation plays. IB calls them ramp and dumps, very similar to pump and dumps. But I guess in this case, they're just saying they're ramping them up before they obviously dump the stock. So makes sense because there's not really a lot of pump, right? It's just them churning. And we've talked about the washing of the shares and creating this market that is not legit. It's just back and forth, back and forth, back and forth, creating the appearance of demand, building that chart, enticing traders to kind of join that trend. And then, just like CCTG this week, they end up absolutely hammering the trade. So they finally warned their clients, but, we've been on this for 3 years now, warning you guys, but you can kind of see this RTC as an example, WNW, and they're not all made to be the same. We had SJ, which I warned about on Friday, which did not have that quote unquote ramp. It has in the past. This was another day that they had done it. But in this case, they just absolutely tanked it. So it's not always going to be a perfect case, unwind. And most of these, unfortunately, I miss because the volume is just too low. And in a situation like ZJYL, you're going to be happy that you avoided it. So it's more of being aware of what to avoid, because if you're on the long side of these, you have a chance to lose 80% in a couple minutes. And if you're on the short side, you have a chance to lose more than your net worth in a minute. So just stay away, be cautious, be aware, and flip back over to Chris here. When last time we had another crazy one of those things to avoid, regional banks. Regional banks, if you guys remember, what was it, SVBIQ or whatever that is now. I forget what the new ticker is, but we had all those regionals, and it was very hard to get long any regionals because at any moment they could be liquidating. And so we had a period of, I don't know, maybe 2 or 3 months before the dust settled a little bit. And then we finally had a little bit of a warning shot this week, and that was on NYCB, which completely unwound. And you can kind of see here on the chart that it gapped down. And what happened is it started to bring the other regional banks down, WAL and ZION. So I know that Chris, you guys have watched his videos on the anchor concept, and you've got this one name that starts to either pull everything with it down, or in the case of like the Bitcoin examples, as it's going up, it starts to pull everything up with it. So you can attack this one on this recent turn of events on NYCB.
Yeah, this is one of those names where everyone has PTSD from the cycle that happened, I think, in March of 2023, where these regional banks were failing. They had bad loans, interest rates were hurting them because that takes down their collateral. And so basically, banking as a business, it's a very leveraged business. The bank only has so much cash on hand, and then they have huge amounts of loans and other things. And so it's like a pyramid standing on its head, and it's very unstable. So if something goes wrong, it starts to get very wobbly. And then banking is also one of the few businesses where actual confidence is a tangible asset to them on their balance sheet. And so if people start to believe that there's something wrong with a bank, imagine if you bank there and like you see, the stock chart doing something like that, people start to make withdrawals, and then their collateral goes down even more, and it makes the bad situation even worse. And then people are like, oh my gosh, is it all regionals or anything? So it's just a vicious cycle. Now, after the last kind of banking scare, the Fed came out and basically said, or the Treasury came out and said that we'll make any depositors whole. So if you lost money in a regional bank, we will pay you back. And so I think that has dampened some of the scare with it. And so people might not be running to the exits on some of these banks, but it's still good to be aware of that. You could have a headline come out saying that NYCB is now going to FDIC receivership, and that just means where the Fed has to step in and basically liquidate it and sell it off. And this was actually one of the banks that got the assets from another bank that liquidated. And so it's a bad business overall to be in. It's very unstable. But all that being said, just be aware of headlines or big moves using this as kind of that guiding, like the ship. And so that is the ship. And then the rest of the names like KRE, that's the ETF, and Zion, ZION, and WAL, like all these names that traded with the banks beforehand, they have very similar moves. And a lot of times they have the same chart. And so, like Nate was talking about, you have some halt risk with some of these. So one thing that I like to do when I'm dealing with an individual name risk is I like to go for the ETF, because you could have 3 or 5 names of regional banks halt, but the ETF is going to keep trading unless there's like a volatility halt where it's just up or down, but they won't have this bank shutting down kind of halt. And so what I like to do and how I like to play these is, if let's say we have some kind of a gap up on NYCB, it's stalling out, and then you have some kind of negative headline come out, they might slam down and halt, and I'll go immediately to KRE and I'll load puts or something like that for that week. And so I trade options and stock. So for something like this, I lean more towards options, but you could easily short KRE, and the same if they flush down, they have a positive headline, you could either try to do a bounce trade, which we actually have a video coming on bounce trades, should be this upcoming week. But you could either use KRE to play some of that upside, or some of the other names that are not at direct risk of getting halted. So I just look for the safest way to play an unstable or a very volatile theme.
Yeah, and something about the ETFs, you're not going to have maybe as big of a percentage gain as the individual name had you traded a WAL off a flush or NYCB, but at least you have less risk. There's still obviously market risk, but the individual, potential market halt for news that turns into something that delists, you're not going to have that necessarily on the KRE unless all 5 or 10 of them do it at once.
Exactly. And yeah, I think there's 20 or 30 names in KRE, so it's even more spread out. So that's a really good vehicle to play some of these themes.
All right. So switching gears a little bit to one thing that, again, you guys hopefully have seen some of the videos that we put out there. And one of the feedbacks that Josh gave me is only 30% of the people that watch our videos are subscribed. So make sure you subscribe to Investors Underground YouTube channel, because we are pushing out other videos. So Chris has already done, I think, 3 or 4 of them. Like he said, he has one coming this week. But we have more videos coming. We have trading takes coming. So if you don't get the email, at least you get the push notification on your phone. But one of the ones that Chris did a video on is, something I talk about all the time: liquidity traps. And I kind of wanted to hit upon not only liquidity trap, but also not forcing something to happen. And I feel like a lot of times people start to see a liquidity trap play out, and then they force it to, be that one that has that outlier move. And if you remember, if you're betting on some sort of black swan event, your profitability or your edge is going to drastically go down. And the reason for that is because now you're going from something that's a high probability potential squeeze to something that is a low probability outlier black swan event, which might be 1 out of 99 or 1 out of 999, whatever, 1 out of 1,000. And what happens is, if you're waiting for that, more often than not, you're going to end up in a situation, say something like ONMD, which was a perfect liquidity trap setup. It did squeeze out, but what happens is, if it meets inventory, that it basically kind of counteracts the demand that's coming in from the cover, then that's the trade. And the trade is now exhausted out the early shorts because the inventory was able to meet the demand, and then it starts to fade off. What happens with the outlier liquidity traps that continue to go is there's too much demand, not enough supply, right? So supply came out from whoever wanted to sell, but in addition, it came from shorts. And then at some point, there's just too much demand, not enough supply, and it surges the price forward. So I wanted to make that known, because I feel like I see a lot of people trade these liquidity traps, but then they get in this mode of, no, it has to go. It has to keep going because this is that setup. But remember, liquidity trap is just anticipating that cover to come in. And yes, there's going to be times that they start to compound, which I'm going to talk about, but most of the time it might just be that squeeze, and then you need to move on. So then you've got other ones like this MINM this week, which really reminded me a lot of Nexi, very similar setup. But what happens is people look at the volume and they don't realize how small these floats are. And sure, I realize that sometimes these floats can get pretty thick real quick based on conversions and offerings and all of that kind of stuff. But if they're not, you have to be aware of what that float is, regardless of the volume. So when you've got something 67 million shares, 40 million shares, 30 million shares, right? It's traded 100 million shares on what, a million something float? So you have to be aware of what the actual float is, because what happens is you look at this, you look at all the other times, well, it always fades off. And then guess what? It held this time. It held Thursday. It held Friday. And now we might be coming into a huge failure to deliver come Monday or Tuesday. So I want to come in with two plans on MINM in the event that we just blow everybody out pre-market and then it fades off. Or one of the recent things that I've been talking about is sort of a compounding liquidity trap. And what I mean by that is when you've got that first liquidity trap, then it starts to fade off, consolidates again. That next day, it gaps up huge and then fades all the way down into the open. So you've got the initial buy-ins. Now you have all new shorts coming in. And then all of a sudden it holds. It holds after the open, 9:45, 10 a.m. plus. It swipes up. So not only do you have the prior shorts from the entire reason we had it on watch, a liquidity trap, but now you have a second batch of shorts. And between the buy-in and the new ones, you start to have that compounding, almost perpetual squeeze. So that is the second type. And then the third type is something that takes a whole lot longer. And sometimes NKTX types, you see it. And this is more of like a transitional day where there's a new buyer that comes into the tape, and maybe it doesn't do it right away, but over time they start to grind it higher and higher and higher. So there's three different types. There's one that is just sort of anticipating maybe T+2 or the next day kind of cover, and that's kind of like a one and a done. Then there's the compounding one that traps again and has that secondary squeeze. And then there's one more of the big macro perspective, which is more up Chris's alley. And you kind of looking at, all right, what is the big picture time frame suggesting here? And then when it does start to break out, obviously you have that next secondary big move. And so anyway, I think that was important for this week, especially on things like NEXI, and we talked about SIDU as sort of compounders. But right now, as we're going over this, and currently in the market, we have MINM, which is going to be interesting to see how that plays out, especially if they cut the volume off. So that's that. Speaking of macro type of moves, obviously we have Bitcoin still churning around and had a good bounce this week in Mara. And as you guys know, that's been a big one for me over the last 2 weeks, more of a macro concept, thinking about the anchored theme that Chris talks a lot about, where Bitcoin is just dragging up all these other names, and how you can, kind of take advantage of that or find an edge. So, Chris, your thoughts on Bitcoin, Mara, and the rest of that sector this week?
Yeah. So a lot of times with these big sector moves, it's kind of like what we were discussing with the large caps, is they'll make a huge run and then they'll kind of consolidate. And so you have that with Bitcoin itself. The stocks trade a little bit differently because, especially with the halving coming up, you have different variables for the stocks. So basically, the way that the Bitcoin mining stocks make money is they figure out the algorithm for Bitcoin, and in exchange for that, they get Bitcoin. And so that their margins and everything are determined by the price of Bitcoin. when the halving comes, the amount that they get paid to basically solve the Bitcoin algorithm, that gets cut in half. And so you've had a lot of bearishness on these stocks because they're anticipating that coming up. And so even if Bitcoin is hanging around the same area, the stocks can still flush lower. That can also lead to bearish positioning becoming a little bit too offsides. And so if too many people are anticipating the halving or they think that the stocks are going to stay heavy relative to Bitcoin, if Bitcoin makes a big move, or if you get enough short interest or enough tension in these stocks, then you can have an outside move within the course of a couple of days of 20-30% easily. And so what I like to do is I like to follow the price of Bitcoin after a big move. I see it's consolidating. You can see that demand wall coming back up. And if that starts to have a nice $1,000 or $2,000 move from that $43,000 level, maybe back to 45 or something, you could have Mara go back into the low 20s, and it's at 18 and change right now. So you can get a really nice trade on some of those things. And again, if I'm trading equity, I usually wait for a flush and then try to have a defined risk level. And as long as Bitcoin's trending the right way, then I can use that as my guide to ride it for a while. But then if something happens pretty suddenly and Bitcoin moves first and the stocks lag, then sometimes I'll do call options on that. And I have an entire week, or I can do 2 weeks out to try to get a catch-up move from the stocks to Bitcoin.
We had that too on Bitcoin when it was coming the first time. I think it almost got into 40,000. I think it was like 40,300. And then it bounced and everybody was like, all right, that's it. We finally bounced. Good, great. And then we go and retested that 40 and that psychological level, flushed everybody out. But at the same time, Mara and Riot, they're kind of slowly, obviously they were unwinding, but they started to slow down their pace. And then when that flushed out and came back on Bitcoin, that's when we finally had that huge Mara rebound. And I feel like that's one important thing when you're trading these. I feel like they provide such a big opportunity that you want to keep going back to the well. But you have to remember why that was a big opportunity. It was a setup coming into Bitcoin, ETFs, and all that kind of stuff. So you've got that huge extension as an opportunity. You have the huge, pullback as an opportunity. But then you need to wait for that next big move, not every move. And I feel like that's, just even like Plug this week, for example. Plug had a great trade, really good opportunity on Thursday morning. But everybody wants to go back to that well and hammer it again. But that's not the same setup. So just make sure, like Chris said, you want to make sure that Bitcoin is suggesting, a major move one way or the other if you're going to start to attack something like Mara or Riot or any of these other ones that have been really nice traders based on Bitcoin itself. So that's good. And last but not least, before we get into watches for the week ahead, stuff up Chris's alley, not so much mine. Comments on the Fed, SWIP market, how that impacts stuff like IWM and Tesla and all that good stuff.
Yeah, so basically the quick summary is that we all know that over the last couple of years, the Fed has done a really big hiking cycle. And so in order to slow down inflation, they hike interest rates, and that makes borrowing more expensive. It basically makes it more difficult for people to do things and more difficult for businesses to do things. And that's supposed to weigh them down. And so what we've seen is as we kind of peaked out at the Fed's target rate of 5.5% or so, inflation started to come down, and now everyone was expecting, okay, we're going to start cutting rates, and the Fed cycle will kind of go in the other way, where you'll make things easier and easier for businesses and for people. The problem is that right now we're at a very delicate stage where if the Fed cuts too soon, inflation will come back up. But if the Fed doesn't cut, then certain businesses get hit harder than normal. And so the businesses that get hit harder than normal when interest rates are higher are usually businesses that deal with a lot of physical products. So take Tesla, for example. If they have to build factories, if they have to borrow money for things, it's an expense for them, and it's more difficult, and it also impacts demand. So Elon said on the most recent earnings call that if rates stay high throughout this year, it will be a drag on the stock. And you can see that because Tesla has a lot of relative weakness compared to some of the other names like NVIDIA or Microsoft or anything like that. And so what I try to do is if we're at a delicate stage with the Fed and decisions, I like to put two buckets out there. One, which companies are being hurt by higher interest rates and which companies just don't care about that and which companies can grow regardless of that. And so if the market's ripping, then I can look for something like SMCI or Nvidia, or really the leaders or the ones with relative strength. I can try to play those if I'm trying to trend on the long side. But if the Fed doesn't, change rates at all, and we start to have some pullback in the markets, then I want the stocks that have relative weakness or the ones that are really hurt by that. And so I'm going to be looking for things like Tesla or the index IWM, which is a small cap index. And usually smaller companies are hit even harder than large companies by interest rates. And so that's just something to keep in mind. And then a lot of the economic data that will be coming out over the next month or two, that will really help the Fed to decide of whether they should leave rates where they are or whether they should start cutting. And that will be a big mover of SPY and a lot of the companies that are interest rate sensitive.
Perfect. Those are all things that I'm not the best at understanding. So I always like to hear other people like Chris. And one of the other things too, I had a note here that I just was going to mention, but in my 2024 post and sort of my goals for the year ahead, it's about putting other people on the map and stuff. But like, why Chris? And why other people that you see? And I think one of the benefits about kind of surrounding yourself with people that are doing things a little bit different is, why is Chris focusing on this Bitcoin index? Why is Chris focusing on, these banks? And he's coming from a different perspective. And so if he specializes in that particular sort of either the macro look or the sector and theme type look, that means it's time for me to probably start looking at my basket of names that kind of fit into what he's looking at. And I think that's one of the biggest benefits to kind of having different trading tools or what's in your trading arsenal. And that could be different people, different tools that you use, but being able to pull these things to make you better, because look, you're never going to copy one person, right? My way is not the right way for everybody. And even in this past year and a half, 2 years, I'm starting to kind of venture away from small caps as much as I used to. Yes, I'll still trade them, but you start to outsize, you're in the trade itself, but you also, there's just such outlier risk that, at this stage in my career, I'm just not interested. So now being able to look at what Chris is looking at and different people, Stan will have on here at some point, when he's looking at an AFRM or other names that maybe skip my radar, it allows me to rezone in. All right, what is he looking at? Is it a setup for me? And it's been really beneficial to kind of getting that. It's almost like a cheat sheet. Everybody's doing what they do best and sharing it. So if you can take a little bit from those people, it's going to help you really, really compound your knowledge and whatever you're looking to do much quicker. So like I said, Chris has another video coming this week, bounce plays. And let's get right into the week ahead. We'll go over pick a couple trades. I won't bore you with 20 different watches or anything like that. But as always, Chris, we're not financial advisors. These are not buy or sell recommendations. And this is for educational and informational purposes only. So first and foremost for next week, for me, I've been just kind of coming to the market and seeing what's been gapping up. There's certain times where you come prepared and, all right, this is the trade I'm taking. On Thursday, plug is the one. That was the main watch. I was prepared. It was into my wheelhouse. No, it wasn't a huge move, but it was a very high probability type of setup for me. And then as it started to prove me right, thesis was intact, 495s broke, then I went ahead and scaled into the trade. Same thing with Mara and all those. Those are days that I'm like, all right, here we go. There's an opportunity here. I am prepared. I know what I'm doing. They come into my wheelhouse, I react. And then there's other times where it's good to just have a good feel for what's going on. What is the market rewarding, right? So if it's rewarding these small caps, these low floats, it's good to know, especially if you're a short seller. You don't want to step in front of something. But in a situation like this MINM, this is very interesting. And for me, my thought was it was going to be pretty much sideways on Friday and allow these shorts to kind of marinate and feel good about their short. Maybe it fades off through most of the day, they stay put, and then come Monday or Tuesday, well, they're hit with a buy-in or something like that, or a margin call if it were to ramp up. So I'm prepared for two situations. If this were to flush off open but not stay heavy, I'm interested in that potential circuit halt back up and some sort of account destruction, because at the end of the day, this thing is a super, super thin name, and I want to be prepared for that. But be aware, I always like to just kind of put some lines in the chart and have, be familiar with what levels matter. And this day where it had sold off, it pretty much peaked out at this 780s range, which is pretty much in line with where it peaked out on Friday. It was, I think, 8 and change pre-market for a bit of time, but for the most part, it peaked at the same price. So I'd be watching that. I would assume that it's going to have trouble with that 780s level. But if it starts to prove and push over that, hands off, have an imagination, don't get in a fight with the trade. But this is one of those situations where it is potential liquidity trap that could turn into a perpetual squeezer. Then we've got NRBO, another thin one. Again, I don't really love to trade all these thin ones, and I'm trying to get away from them. But for me, it's these are the watches for this particular week. And like I said, there's not a ton of home run type setups. So NRBO, this was a really nice one, great clear out move. One of the things on Friday, which I had mentioned, is you don't want to get in a situation where you're trying to anticipate which way it's going to go. The sooner you can, kind of identify that there's a channel here, it's not rocket science. It's pretty easy if you're looking at the chart to see that it is stuck between these two levels. You want to let those levels exhaust out, and then the edge comes once it comes back under that level. And that's exactly what I did on Friday. Had a nice fade, but unfortunately, when it came all the way back down to this low right here, I was at 1 penny lower and I did not get out. So I ended up having to cover into the 490s instead of lower. I had a bid at 455 and then 380s just in case it flushed out. But that's the only frustrating part about these, liquidity, and it literally just changes on the dime. Then we've got Rum. Rum is the final main watch for me. This one's been hanging around quite a bit, but as strong as it looks, yes, it's bullish. Yes, it's holding well, but I want to watch for it to fail, because I feel like a lot of people take these things off radar, and all it does, it's one day, it exhausts out that one last time, and then there's this huge pullback. This was a $2 pullback. May not look like much on the chart, but nice gap up move, and then a steady fade just by keeping it keeping it on your radar. So in a situation like this is $11 all the way down to $9, right? And so I feel like Rum will have that at some point, but most people are starting to take it off radar. And when you take it off radar, you miss it, and you miss opportunities like Alt that we've discussed. You miss opportunities like CCCC that we've discussed. And you can see that each push starts to get weaker and unwinds to a lower level. So those are the ones that are main watches for me. I have a couple other of the ramp charts. So for example, you guys can go through, click through to the website and see some of the walk-up charts. But this BTOG is obviously being walked up, and you've got KU, KE, and a few others that, LXEH, we've been talking about since $2. But these are all ones that they've been working up. And at some point, those charts will look like that. So if there's an opportunity and it sets up, I'll probably trade them. But if it gets a little sketchy and the range and the volume and all that kind of stuff gives me that kind of like hands-off approach that we've talked about on that CHSN trade and the ZJYL, then, there'll be total avoids. But it's always good to kind of watch these walk-ups, because even 1,000, 2,000 shares, when they drop 10 points, still adds up quite well. So that's it for me, and we'll move on to Chris and see what he's got for the week ahead.
Yeah, so a couple of the main watches this week are NVIDIA. So you've seen SMCI and NVIDIA really just take turns running. The options get ahead of themselves, and then they kind of consolidate. And so last week was all about SMCI massive move. A lot of people got in. You had options or calls for the 600 level and even up to the 650 level. And so I think what you'll see is for the first couple of days of this week, I think NVIDIA is going to take the reins and it's going to have its own run because NVIDIA has not reported earnings yet. They report in a couple of weeks. And so seeing how good the earnings were on SMCI and knowing that they're directly related in the same field, I think that there's going to be a revaluation of NVIDIA even higher. And again, even though these charts are going parabolic, if their earnings and their revenue is also going parabolic, it can last a lot longer than you think. So I try to identify what are going to be some of the strongest names that can shake off news in the market. And right now, that's NVIDIA. I think that's going to have a nice run this week, and also SMCI after it consolidates. And so what I usually like to do is if I see we're having somewhat of a trend upward day in SPY or in the index, I'll look for the strongest names and then I'll look for an entry to either get calls, or you could do equity on these. You know, everyone trades differently, but with very large names like this, I usually stick with options. So I'll be looking at NVIDIA and SMCI, but SMCI probably not until a little bit later in the week because I still think that it needs a couple of days to consolidate and digest that move. Because again, once these things get ahead of themselves, they need to reset, have the option premium come back down, get some buyers to step in, and then you kind of continue for the next move. So SMCI and NVIDIA are on watch this week for calls. And then I also want to keep an eye on Mara and Bitcoin. So Bitcoin is what I'll be watching directly. And I think that we're at that 43,000 level right now. And if we start to ramp back up to that 44,000 level, 45,000, I think that NVIDIA, or I think that Mara is still going to play catch up because, I mean, they sold off almost 50% from a 7,000 or 8,000 flush in Bitcoin. And so if that move goes right back up, then you could have a 30 or 40% move back up in Mara. And so that's definitely on watch. I want to see if these names start to trend a little bit with Bitcoin. And so what I'll be looking for is for maybe a week open, and then for it to hold a level, and then for Bitcoin to start to ramp up throughout the day. And then I would be comfortable putting on a long position, either with equity, using the low of day as risk, or with options with calls. And then I'm also going to be watching NYCB. So this is the bank that has the trouble right now. And so I'm going to be very aware of headlines with this. And so I usually don't trade these names directly. Sometimes I'll have some puts on them just in case they get like a really bad headline. But usually what I'm looking for is this just to act as the ship. And then I'm looking for the anchors that it's going to drag with it. And so the anchors in this case are mainly KRE for my purposes. So that's the regional bank index. And so even if NYCB halts down or halts up, this is still going to be trading. And so if you see a piece of news or if you get a halt in NYCB, this is going to be a good go-to name to either trade with options, either way, calls or puts, depending on what the news is, or with equity. But again, you'll be experiencing somewhat of a smaller move. So if NYCB goes up 20% or down 20%, this might move 6% or something. So just keep that in mind. And then I'll also have things like Wall and Zion, which are also regional banks. I'll have those on watch too, just if I want another vehicle to trade the banking theme. If there is significant news, then I'll definitely be watching that. And then for more the relative weakness, I'm going to be watching Tesla. It's been consolidating in this channel. And I think that if you start to have a pullback in the market, and I don't know, I have no idea if we're going to have one, but if we do start to have one, this is going to be a go-to name for me to really try to get some puts on it. Because I think that if we get towards that lower end of the channel and the market's weak, I think it's going to break and I could participate in that. And then the other names that I'm watching is IWM, and that's just a small cap index. And that's really another one of those things that's interest rate sensitive. And so just to kind of demonstrate this topic just a little bit more, I'm going to pull up let me pull up the 6-month chart for IWM. And then let me pull up TNX. So you can see with IWM, it had a big trend down and then a big trend up. Okay. And now this is directly related to interest rates. And so what I'm going to pull up right now is TNX, and that's the rate of the 10-year interest rate. And it's going to be an inverse relationship. And so you'll basically see this chart flipped upside down. So this is TNX. And so you can see that there's very strong correlations. And so just like with Bitcoin and Mara, that's an anchor. With NYCB and KRE, that's an anchor. Interest rates can be an anchor, or interest rates can be the ship and anchor something like IWM. And so I'm definitely keeping that on watch if there's Fed news or anything else. And so those are the main ones. And then MINM, I'm going to be watching that alongside with Nate. That's really the only thing that interests me in small caps right now. I'll take a look as the week unfolds, but I like situations where it gets really short crowded. You have a level that is a strong base, and then if it starts to grind up, then you can have a big blowout move. And I like to risk off that strong base that's building. And I don't like to trade these after hours or hold them, but I'll trade them for maybe 15 minutes or 20 minutes or an hour just to participate in basically the level stops going down and it can start to chug up and get a big swipe out of it. So that's what's on watch for me this week.
Perfect. All right. So, and again, my main watches, some of them are small caps, but this week for me, Plug, RUM, PTON, all those types of names that are super, super thick that have either a big gap up or a big gap down. That's really what my goals are, rather than these small caps that can just be one circuit halt away. There's certain trades this week that, it's a great, nice steady fader, starts to flatline a little bit. And then we've got a Discord or a newsletter that goes long and it just completely changes the trend. So those things you don't need to worry about when you're trading the bigger, thicker names. It's the small cap crap that you need to worry about. And which is another one of those reasons why, it's not really a high focus for me anymore. But awesome. I appreciate it, Chris. And I hope you guys enjoyed this one. We will have lots more. And, we're trying out new things and trying to put some other people on the map that have just some great qualities of their own. Again, there's no one way to trade. So looking at things from maybe a more of a macro perspective could fit somebody's personality better, especially if you had a day job or different things where you can't be glued to the desk or you don't want to be glued to the desk. One of the things that I said in the 2024 post was that I want to be able to get up from my desk at any moment, and there's certain times when you're in trades, especially small caps, that you literally can't leave the desk. So more of a macro perspective is helpful, probably healthier too, where you can kind of look at these bigger pictures and not be so glued to your seat. So anyway, appreciate it, Chris. Have a good rest of your Sunday, and we'll see you guys in the room tomorrow.
Great. Thanks.